Hello, everybody. Thank you, MT, and everybody in the chat. Thank you all for being here. It is 24 hours before the end of the month, and let's see what's going on. Hope everything is working fine. I didn't do a sound check today. I'm just going to jump right in. So today's story, there are 24 hours left for the month of September, and let's analyze how bad it was, look into history, and typically what September brought, what October can bring. And DCA is tomorrow. I'd normally do this on the eve of October, which would be tomorrow, but because we're doing DCA, I can't. And this is my second Uptober video. The last one I did was October 2021. So let's jump in. And by the way, Bitcoin at that time was 49K. So as usual, not financial advice. And second, let's talk about this. This is really the real headline. Bitcoin steady as currencies around the world tumble, from Singapore Times, I think it's called, or Business Times from Singapore. And it's the headline that everybody is kind of, feeling right now around the world. Everything is tumbling, currencies are collapsing, and Bitcoin is steady. And it's like, huh? Everybody thought September would be a horrible bloodbath for Bitcoin. Well, let's analyze how bad it has been, if at all. So first of all, this is Bitcoin versus all crypto for September. And Bitcoin itself is down 2% for September, which for Bitcoin is nothing compared to history. But let's examine the month-to-date data for Bitcoin against all other cryptos and how they've done, because we like to denominate things in Bitcoin because fiat is collapsing. You guys all know that if you watch this channel. Now, you can see here Bitcoin against all the other cryptos. XRP is dark green. Solana, darker green. Let me see. Cardano, light green. Binance, light green. And Ethereum, dark red. Avalanche, dark red. Polkadot, dark red. Near, dark red. Tron, a little bit of pink. Matic, pink, etc. So you can see it's been kind of mixed. And of course, the big story is the ETH sell-off after the merge. By the rumor, sell the news. It seems to work most of the time, but that's where we are. But let's look at stocks for a second when we get back to crypto. Bear with me one second. So stocks today was a bloodbath. It took the markets down below the June 16th lows on the S&P 500. But crypto is up a lot from the June lows, which is very, very interesting. But if you look at this chart here, Microsoft down 9% for the month, Apple 7%, Google 8.7%, Amazon 9.8%. Everything has been kind of down hard, but Johnson & Johnson up 2%. Tesla still up 1.05% after losing 7% today, which is kind of stunning. So again, looking at the markets, look at like you look at the crypto market cap. It's not about the crypto market cap. It's about the elements inside the crypto market cap, the elements inside the S&P 500 that matter, and make sure you're on the wrong horses. So even after a big hit today, Tesla is still green for the month. Now, in decoupling news, a lot of people would definitely have been surprised to see this. This is the month of September to date with NASDAQ against Bitcoin. Bitcoin is the blue, and NASDAQ is the orange. You can see NASDAQ is down 11.2%, while Bitcoin is flat for the month. Well, it's down 1%, but we'll call it flat because it's close enough to flat. Let's see how the S&P 500 compares. You can see here, again, S&P down 9.6%, and Bitcoin minus 1%. Let's call it flat. So that's also super interesting. Bitcoin is trying to break out of his box, and we have a month of data now where it proves that it is edging in that direction because everything else is falling apart, and this is the safe haven that we all expected it to be one day. Maybe that day is coming a little sooner than expected. Let's dig into some history right now. These are the monthly returns, including September 2022. I hope I don't jinx it, but right now, when this slide is put together, Bitcoin was down 2.33%. Again, it fluctuates all the time. Now that Bitcoin is at 19,450, it's down around 2% for the month. Again, it's a moving target, so the slide is static. So forgive that small little change. But the big point is here, normally September's a lot worse. Last year, minus 7%, minus 7.5% the year before, minus 14% the year before that, etc. This time has been a little bit different. And we did say at the beginning of the month that because the summer was so bad, September couldn't be as bad as the summer. It's like, as I say, falling out of a basement window. There was no more downside. And so far, that's holding true. We don't know what's going to happen in the future, but this is pretty positive. Now, if you look forward to October, because that's what we're talking about now, so far, if Bitcoin can hold around its level, it'll be better than previously. But the next 24 hours will be volatile, and I'll talk more about that in about 2 slides. But in the meantime, looking forward to October, the average return for October is 28.42%, which would take the Bitcoin price up to about $25,000, $26,000. So we'll see if it goes there. 25K was where we were not too long ago, and we could easily get back to that level. Let's look at how October benchmarks against other months in the history of Bitcoin. And here you can see September is red. August is kind of like break even. But October is the 3rd best month historically, and that's why many people refer to it as UPtober, although I haven't seen it mentioned at all today or tomorrow, but I'm sure there'll be a lot of videos about it tomorrow. But if you see, the best month is November. Some people call that Moonvember, and of course April is typically a good month as well, but this time it hasn't been. So that's kind of a little bit of history. But where we are today, again, minus 2.3%, minus 2% for September so far, versus the 5% average, we are doing better than before. Now, there will be some volatility because of this. This is the option expiry. Big one tomorrow. $2.2 billion worth of Bitcoin options are expiring mañana, or just before lunchtime, my time. Now, Bitcoin's rally on September 12th took us up to about 22,500, which faked a lot of bulls into thinking we're going to go higher and September was going to break all the records. But no, the macro picture got really ugly, and that's where we are now. And it becomes evident because only about 15% of the call options for September 30th have been placed at 21,000 or lower. So everybody had a very bullish view to the month of September. In fact, at the beginning of September, the max pain price was about 25,000, the overall expectation. That has not come to fruition. And the broader view right now is if you use the 1.49 call to put ratio, it still shows a skew situation with bullish bets, calls, open interest about 1.26 billion versus 850 million put options, which are bearish. But net for this to work out, by my rough calculation, we need Bitcoin to be above 21,000 for the bulls to win, because all their stuff is so heavily skewed to the right. Under 21K, the bears won their bets. So expect some volatility going in tomorrow. I don't expect Bitcoin to shoot to 21K, but you never know what could happen. It depends on who the big bag holders are that can maybe tweak the price a little bit. Now we're going to switch gears for a second before we jump into a little bit of more Bitcoin / macro / currency news and how it all is interconnected. But this was a quick post from Solana Daily. And you can see the top chains by NFT volume sales growth over the last 30 days. And 108% growth for Solana with minus 31% growth for Ethereum. And as I've been talking about for a long time, you see the NFT traders are moving from one chain to another. They're moving from, I won't say it's slow and expensive, but something that is better, cheaper, and faster, better user experience. And that's what's happening right now. We also have things like Panini and Avalanche and Wax had some good growth as well. Flow kind of flat, and then some others just losing it, including a shocking 35% loss of Polygon. That was quite substantial. But anyway, this explains why you have a ton of relative strength on the Solana price action over the last few weeks as well. Again, it's reflected with activity on the chain. That's why we always look at that. Now, let's switch gears for a second. It's a bit of a macro news on top of my video yesterday, because things are just, I don't know, somebody criticized me for laughing at the situation, but it's more like laughing in disbelief of the type of things that we're seeing happening right now before our very eyes. So I don't mean any disrespect by laughing. I just think it's kind of comical because I didn't expect it to be so bad so fast or change so fast. So first of all, German inflation. Christine Lagarde was shocked about seeing 10% inflation in Germany, highest on record since 1970. Again, we knew this was going to be bad. The UK is expecting inflation as high as 18.6% in December of this year. So the inflation is still a massive problem in Europe, far worse than here in the United States. And of course, the big shocking news yesterday was the Bank of England pivot to printing. Pivot. Big story yesterday. I made a whole video about that and the interrelation between currencies all over the world. That was shocking. But you know what? This resulted in that just over the last 48 hours or so, the volume of transactions in Bitcoin sterling pair across 8 major exchanges globally spiked to a record high of nearly, okay, get this everybody, nearly £1 billion. Okay, so the Brits were buying buckets of Bitcoin. I love my alliteration when I can insert it. And the surge was likely due to, obviously, a lot of head scratching happening over in Europe. But there was a high correlation between, obviously, Bitcoin volume and political monetary instability. Okay, I think it was James Butterfield who said that. And I talk about his stuff all the time. And we saw this previous pattern happen with the Russian ruble and the Ukrainian hryvnia. I probably got that wrong. When there are such big moves in people on the ground being concerned about their currency, and they just bail into Bitcoin. And that's what's happening. That's why Bitcoin is so strong right now compared to other assets. And it's holding up because people are trashing their sterling and whatever else and jumping into Bitcoin. Back to Germany for one quick second. Germany announces a $200 billion euro relief plan to cope with inflation. This is from Watch Your Guru. I don't know if I necessarily agree with this headline because I do think it's a little bit misleading, because it's not that they're turning the money printer on, which could be construed as a pivot, but it's not really to combat inflation. I think it's to help the people and companies deal with skyrocketing energy prices in Europe due to the war in Ukraine and that horrific bombing of the pipeline. I don't know what that means for the environment. I'm even afraid to even look as to what all that natural gas in the environment does. But anyway, shocking situation. I think that's the problem. But again, you could construe that as a pivot, more money printers, which are inflationary. So it's not really going to help the QT side of the house. In addition, in Europe, another kind of, many people would believe it is a driver of demand for Bitcoin in Europe. By the way, Bitcoin just shot up $100 since it started, so that's good news. Here, Blackrock is ramping digital asset exposures for European clients, launching their new blockchain ETF. But this is such a head scratcher. It's like, Blackrock, please, let's dig into what's inside this. This is why sometimes I laugh. Sorry, my phone is there. I've always turned my phone onto airplane mode, but not today. Anyway, let's talk about Blackrock and dig into what their ETF is all about. Here, they created an ETF with digital asset exposure. But look, I've got 2 categories here. One is questionable holdings. Their largest allocations are to Coinbase, Galaxy Digital, and Marathon Digital. Okay, Marathon Digital I've spoken about. Of all the crypto miners that I analyzed, 8 of them, that has the worst financials right now, in the scariest position. Galaxy Digital, do we have to talk about their exposure to certain assets? No. And Coinbase? Well, that's just has its own set of issues. And very questionable holdings, PayPal, Nvidia, IBM. I mean, if you're going to invest in something like a PayPal, you buy Square, which is much more Bitcoin exposure than PayPal. Nvidia, they don't make ETH mining chips anymore, so I don't get that either. And IBM, total head scratcher. So maybe the BlackRock team, Larry Fink and co, had bags of stuff to say, oh, let's package this up and sell it to retail investors. Who knows? But Europeans out there, Don't be fooled for this. It is not. It's not the exposure you want or I would ever dream of in a million years. This just came out as well to prove my point. It's fresh off the press. Wells Fargo, who actually sometimes their crypto reports are pretty good, they basically issued a profitability warning for Coinbase, and the shares dropped 9% down to about $60, $61 today. And Wells Fargo said they are very concerned about fears over competition and profitability. And as I said late last year, the DEXs are going to eat the lunch of Coinbase. FTX is going to eat the lunch of Coinbase. Binance is going to eat the lunch of Coinbase because Coinbase fees are just too high. Real simple. Anyway, here we are. Next in the box, let's talk about China, because this also has an impact on the dollar, which has an impact on the DXY, which has an impact on Bitcoin. So you can see the connective tissue, all related. The whole world is completely interrelated. So China tells state banks to prepare for a massive dollar dump. Sounds like somebody needs to go to the bathroom. And yuan buying spree as Beijing's prior interventions have failed to stem its worst currency year since 1994. And again, they're struggling here to stabilize their currency, but expect more volatility to come. I think they're very nervous because I speak about that quadruple bottom, like triple bottoms and quadruple bottoms. Is that 7-to-1 ratio of 7 yuan to the US dollar. It's right where they are now. If they crash through that, that'll be unprecedented territory in a very long time, and I think that's what they're going to worry about. Plus, they want to get rid of their dollars anyway. And here is kind of what they look like. I think we shared this a few days ago, but they have about $980 billion, call it $1 trillion of US dollars in treasuries, and they are going to be hitting the market as quickly as possible. But maybe, because these guys play chess, maybe they're saying, oh, we're going to dump them just to protect our currency. But no, they want to get rid of them anyway after what happened with Russia and holding those types of assets. But why is this relevant for us? Because dumping the dollar will bring the DXY further off the highs. The DXY hit 114.5, I think, a few days ago. And actually, right now, as I look at it, it's under 112. It's actually 111 and change. So here, this is why we care about the DXY. It's coming off the highs. It means the dollar is getting weaker. And when the DXY is strong, people get rid of their risk assets. When it's weak, people pile into risk assets, just like we saw our friends in the United Kingdom putting nearly £1 billion into Bitcoin in a couple of days, which is pretty bad. Now, final slide, everybody. Justin Bennett confirmed the DXY bearish deviation here in his chart. And he put this together when the DXY was at 112.7. Now it's at 111.8 or so. So it's already another full point. And he said, not only did the DXY confirm a bearish deviation from the 10-month level today, but you can see the channel that he has drawn there too. It closed back inside this channel, which it hasn't been in since I think it was late August. And this also is bullish for stocks and crypto. This is why we look at all this stuff. Sometimes I get comments like, please, no more macros, too painful. But anyway, in summary, always a summary, always a conclusion. Beginning of September, we said it probably wasn't going to be as bad because it's like jumping out of a basement window. It's not much further down to go. We're actually getting to the same level now with the S&P 500, that 3,600 level down to 35. I know a lot of allocators, they're going to just buy. Well, if we do get close, another 100 points on the S&P 500, a lot of people are buying. So that's why I've been nibbling right now at this level, because, things are so cheap. I think the PE ratio and PEG ratio for things like Google are at 15-year lows, which is insane. Anyhow, it might go down further, but it's a historically cheap price. So pick your battle there. Now, the other thing is we have 24 hours left to see exactly where these markets go. Fingers crossed, we'll hang tough. Bitcoin's on a roll. It's 400 points away from 20,000 again. Tesla's still positive for the month. And the dollar index is falling. So maybe we're setting ourselves up for a good October. We shall see. Anyway, thank you all for being here. The data looks good. See you all tomorrow on DCA. And I think, I'll check, either Rob's channel or Ben's channel. I think it's Rob's channel tomorrow. Anyway, have a good night. Thanks all.